Hi Crypto, this is for you an answer to your question on Twitter about EuroCAD chart. This one here, in fact. Oddly enough, one thing I noticed is that your H1 reversal level, this high here, has been broken and potentially, well, it's closed through by the looks of it. Just a quick note to anyone that gives me charts: always include all the times and the right hand side too, the levels, so that I can see what the levels are, if you can please, in your screenshots. Anyway, back to the charts. I've put some levels on my chart, and it's important to note that this is a massive down move. It hasn't really got into the meat and potatoes of the supply and demand area, so longs are quite risky. The only reason I would have considered long on this is just on this, based on this daily chart, this ADR level rather, and as it happens there was a perfect trade there. So first thing I've done is put my 4-hour reversal candle level on. This one is actually lower than that one, the right hand one I'm talking about there. And then so this would only be a bad trade, as it were, based on this. For it to be a proper long trade, you really need to be trending up through these levels. So that's just a pointer there, Crypto. So this H1, as you can see, mine is totally different to yours. Not sure why that is. It must be the times of market close, but it's interesting and worth noting. Then what can we see from this? Well, there's not really any divergence here to talk of either, so that would concern me for going long, especially when you look at this chart. But having said that, what I'm looking for at the ADR when there's a change of, and I'll get to your point about whether to go for the higher level in a moment, Crypto, but as a reversal trade, this was perfectly good. You've got your yellow, your green bar has closed at that point there, and when we drop down to, so that's good for a potential reversal. And just as in the previous video I made literally this morning, we've got our M15 reversal long. That's the this was the lowest low. It's quite difficult to see. This was the penultimate low. You have to look closely at the levels on the candles. So high, low, and then that's candle 1, that's candle 2, the break and close is candle 3. Okay, so that was perfectly good too. So then when we drop to the 5-minute chart, at this point we have to make sure this is all in correct alignment again. The 30-minute close, yep, close green I mean. The 15-minute reversal, yep. And notice none of this could have happened beforehand. There was no 15-minute reversal, so any of these other 30-minute closes we wouldn't have got faked into a long trade, worth noting. And then at this point also it's worth noting the break and close on the RSI histo. And remember, we can't look at any of these here. We wouldn't have got faked in because the 30-minute wouldn't have been right, the 15-minute wasn't right. The minute they all come into alignment, Bob's your uncle. There's your bust, there's your break and close. It is higher than that level there. There's your trade up to a round number. Nice little that would have been the entry there. Nice little 12 pip move. Remember, I'm only after 5 or 6 pips. This is why you see my trades all been between 5 and 9 pips on these normal pairs, as it were, and then 20s and 30s on gold and such like. Just trade the gaps, and that was the gap to that level there. This H1 high, let's get back on that H1 chart here, doesn't really represent a problem because I'm just trading the burst, the natural reversal based on the overextended ADR. Back to your levels. Oh, I put a flip zone in there as well. That would cause a problem to price. Not that I'd trade to it because the round number was the area to trade to. But back to your question about H1, as you can see now, my answer would be, well, my trade is over. When H1, and this H1 reversal, again, it hasn't reversed yet, which is a pain in the backside, but if it does reverse and everything ties up, then we just use the lower time frame to attack that level. If you break that level, you're then into a M15, like we've dropped down to M5 to see the trend, in this case low, high, high, low, high, high, and the entry. M15 would be a new trend when we get past that H1 level way up here. Okay, and you may even have an M30 trend. So this situation would be in place up here, and then you just drop down and look at the M15 in this instance, because you're on an H1 reversal. Look at the M15 RSI, and then the M5, and then the M1. Of course, you can drop down to the M1 to enter an hourly reversal. I hope that answers your question. This in no way represents a good opportunity for getting back into long until we've got that H1 reversal, then the pullback, then you attack the next level up, which is the H4 level there. You would have problems, of course. You have to be aware of anywhere that's got this area, this sort of situation here. There's no supply and demand issues there. You've got supply and demand and pullback there. You've got supply and demand pullback there. You've got supply and demand pullback there. You've got no issues there. So we're always looking for green levels to trade. So entering this H1, you would potentially have problems. And the easiest way to find these levels, sorry if I've gone a little bit off topic, the easiest way to find those call it confusion levels, I suppose you could say, is just draw your H4 supports. You know you are going to have a problem at an old H4 low. So back to that H1 chart, and there's your confusion level, there's your confusion level, supply and demand level, call it what you like. That's why I chose to use candles instead of swings. Far more precise than swings will ever be. And then the line chart, another worthwhile job looking at those two. So, and right down to that trade entry, low, high, high, low, high, high. Old 15-minute resistance, acts as support. That's your trends. Swing 1, 2, 3. We always enter after 4. There it goes. Thanks for watching. Hope that helped, crypto.